I'm Mocha Love here with the tribe, and we're gonna go over some naked charting methods that I learned with brother man Jeffrey Kirkland today. Shout out to him and his TTM movement. Shout out to Trade Nation, and just shout out to all of us learning how to change our lives. Yay! Okay, so I chose the binaural beats because we are to be in the most inner peaceful state that we can be before we show up to the market, right? So since the market is reflecting us, the more our mindset is clear, the more we are feeling relaxed. Um, and your type of music may not be this; it could be more turned up and move and groove, depending on the day, depending on how you feel. But you definitely just want to get yourself in a zone, whether that's meditate, stretch, breathe. So I just wanted to do a couple of breaths since I feel like that's necessary to meet myself. um, and really channel the information that I received and share it as best as I can. Okay. So we're gonna take a moment to just tune into our space, how we're seated or how we're standing, how we're laying down. Just feel our body. And just now tune into where the breath is in the body. Maybe even sway a little. Hear the sound of your breathing. And when we're ready to be still and centered, put the hands over the tummy and feel the breath rise and fall. We'll take an inhale and an exhale. Feeling the belly rise and fall. Inhale, belly rise. Exhale, belly fall. And one more together. Inhale. Exhale. My intention is that we have so much clarity and um, just an open mind and open eyes to see what's right in front of us. Um, we are master traders, and these are the steps we take to feel that. All right. All right. All right. Spine's great. Camper. Shout out to Hasidity on the track for having the words of the day. Okay. So you can see this, love? You can see it, Hasutabi? You can't see it. No, we can see. We can still see? Coolio? Okay. So tradingview.com is where we're at. And TradingView is different than the MetaTrader 4 where we place the trades. Okay? So Using TradingView is ideal to mark up your charts, meaning place whatever indicators you have to, place whatever, you know, structure you have to. Like we're gonna place some angles and see, place whatever you need to on the chart, um, to see how the market is shifting. Like where is it flowing to? Where it's potentially gonna flow to next, based on, you know, how the market's moving. So as traders, that's what we're learning. We're learning how to see the flow of money. So this site right here has an option for you to upgrade and kind of subscribe with them for the year, and you know, get more indicators, get call alerts, just other features that you may want, as a trader. Um, so, oh, I will touch you here and there. Okay. Now, MetaTrader 4 does have this option, right? Because you when we see the graphs on the in the app, they look like this, except on a maybe a black screen or a different color. So you can chart like what we're doing. Or you can chart on your phone as well. It's just that your phone is a smaller screen, so you know that may inhibit you from seeing some moves that you would see on a bigger screen. Many traders have multiple screens when they're looking at the charts, and it's helpful. It's really helpful, but not everybody needs it. Some people trade on their phone only and make money, right, and make it happen. So it's up to you. But the most skilled individuals that I've seen usually use a computer. Okay, so up here in the left-hand corner, you see there's some letters. You know what that is?
That's the trade, right? Euro and Australian.
Mm-hmm. And so what this is called when they're paired together like this, a currency pair.
Okay.
So, yep, this is the Euro AUD currency pair, and we're looking to see if we're going to trade it, place a trade in for it. But it takes marking up the charts first to know, hey, am I going to, dive into this specific trade? Am I going to place it in my MetaTrader 4 app? Right? So this is the part that a lot of us run away from and really scared to do, and we want signals from other people, which is great because shout out to giving signals, right? I love receiving those. I love sharing those. Also, to be sovereign, right? To have financial freedom. Hey, ha, ha, oh. Y'all didn't know who was in the building. Ready and willing. Okay, so yo necesito agua.
Novella's
Oh, this was here for you, my love.
Yeah, I took it.
Okay.
Thank you. Gratitude.
You too. It's here for you too. Cheers to water. Liquids. All right, so let's get into the money. Even though we're looking at charting, this is still a great time to remind ourselves that to move forward in trading real life, we want to have a trading plan in place. So we're going to be going for, on this chart right now, 10 pips. So we're going to be seeing what moves that we could have received at least 10 pips on. You understand the concept of pips?
Each time it goes up, right?
Or down?
And yeah, movement.
Mm-hmm. And do you know what those pips give us?
Depends on your lot size.
Mm-hmm.
Don't touch it.
Yeah, you gotta play with it. So yeah, pips gives us the too much money. Everybody mad. So it gives the money. So the pips is how many times it drops down or how many times it goes up. Excuse me. Price and percentage. It's just the movement of money, and you're going to receive, like Haas said, the amount that you've initially put in times how many this goes up or down, right?
Minus
So
what you gotta pay your broker.
of course, minus what you have to pay your broker, and the broker also amplifies how much you receive in there. That's why we have brokers in the first place. We leverage their money, and that's what makes our 1 cent worth 10 cents in the market. And then the broker gets a small percentage of our overall profit. So, which always outweighs like anywhere else you're being paid, like, or anywhere else your money is. Like for instance, banks, right? You can't sit there and go in and grow it every day and do stuff with it. So let me get my battery on and popping, babe. Please. All right. Okay. So for trading, we always want to start big and then go small for time frames. So up here in the left hand corner, this was the currency pair, and then the next little symbol here and right here next to the currency pair is what time frame do you want to look at. So we have the month, the week, day, 4 hours, broken down, minutes. They go all the way to the minute chart. Right? And we begin, you can go from as far back as a month, far back as a week, but today we're going to go back to a day. Okay.
Yeah, that's right.
Shit door.
No. That's your mom. That's your door. What we going to do?
What you gonna do?
Fantastic. You know what she came for.
Is that recording?
We're about to dive into the magic. You know what to do to me. You don't even understand. Gonna get you out of my system. Ah, 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 la, 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 la. Do.
Reggie.
Ooh, love you. Oh no 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 no. Oh no 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 no. Y'all wanna see him?
Yeah, I wanna see that.
No, no, no.
Yeah, your girlfriend involuntarily put you on camera.
Soon come with the juice. You think I'm funny? Wait till you meet my favorite reflection. The most clearest reflection. Genius.
Genius!
Funny.
Brilliant!
Talented.
Rebellious!
Created.
Harvard!
Knowledgeable.
Princeton!
Cut.
Yale!
Kill.
Hell yeah.
All right. We in the building.
Ready, yeah, wait.
Hey, we get ready, yeah. Ha, ha.
Talk about-
Hey, ha, ha. Ah, ah. You ready, you ready, you ready. Little mommy. Okay, so,
Up in the left corner, the 2 pairs.
Open the left one.
and not the two pair, there's one
No,
pair.
No, it's one pair, and next to it you have the time frames. You can look at.
Right,
You
the
want to
time
go
frames.
from large to small. You can go from
Mhm.
1 to 2 minutes. You understand?
And you can delete here and put in a different currency pair if you desired. You see that they drop down a list of them?
Mm-hmm.
Maybe these are based on, you know, usability. Like, it's, who knows? But they have stocks, futures, Forex, CFD, crypto, index, economy, quantly. I've never even heard of that one. Let's click on that. Just see what it says. Wow. Quandly is a huge financial database that we have connected to TradingView. Most of its data is EOD and is not updated in real time. However, the information may be extremely useful for fundamental analysis. So the child mortality rates are listed here, capital and growth rates of the world, population projections. So this is very interesting. I didn't know they had that option there. And, you know, fundamental analysis is the other type of analysis. I would say there's three, really. They say there's mostly two spoken about. I think someone has mentioned the third one. So the three are fundamental, which is the news and different reports and data and statistics. Then you have technical analysis, which is what we're doing with the charting and the indicators and all of that. And then there's like that intuitive analysis, which is, you know, whole nother goddess flow. So, yeah, and then they have all these other things too. Initial claims, St. Louis Financial Stress Index, like Philly Fed survey. I mean, I don't know what's going on. I didn't know they had all these things for the economy. Wow. So we're gonna go back to where we're chilling, EUR AUD, but that's how you get to other currency pairs on the market. And then, as Haz was sharing, the time frames are listed right next to it. And time frames are important because it's showing you how the chart is moving in a chunk of time. So you can see it more on an inner scope, on a microscopic level, when you dive into the minutes and the seconds and or zoom out and see overall what's been happening in the days and the weeks and the years and the months. So I'll be starting with a day. And can I use you something to lean up, like on the back of you? Okay. So I'm gonna zoom out here. First of all, I'm gonna move this little thing over here. I'm gonna move, no, you, yeah, you there. Oh yeah, with the hand. Move it with the hand. Move it with the hand. I'm gonna put you over in the corner. And I'm gonna play with this area here. These are the zoom keys. Zoom out. You zoom up. Then you can scoot it over. Scoot, scoot. Can I get that scoot, scoot? Hmm?
Where the zoom keys?
Right here, Bubs. Right down here. But this usually is right here. So you want to just move that. Get it up there. And then I just want to get you a bit more. I want you to examine it somewhere. Okay. And I'm sure, I mean, this is 2018. There must be a way to zoom in and out via. Is it doing it? Yeah. Didn't kind of zoom. Must be a way to zoom out from the keyboard. Keypad, because it's a laptop. So when you zoom out, you get to see a greater view of how the money's been shifting, right?
So looking from, what is this, March, when you move it's called crosshairs. You see this kind of dotted line. When you move them over down here, you'll see the dates pop up. So February 17th until now, what has the market been doing in terms of direction? Right. And this is something prime that Jeffrey reminded me of today. Him, Cash, or some of the main two people I hear talking about this. But there's three things you're always going to see in the market. Okay? And it's going to be the impulse, the correction, and then the continuation. Let me show you how that looks. So let's get it right here. See, it's like, I want to zoom in for one of those. All right, right here. Market was, going about its business, right? And then it did an impulse, meaning that jump shot. Correction. So it's like, okay. And usually a correction is like really returning down to another level, but this one did a correction as in a consolidation, like try to rebalance, right? Like, oh, we just did all of that. What are we gonna do? What are we gonna do? And then continuation. It went and continued. Like, we're gonna go up, right? And then after, and that kind of looks like almost an impulse too. Correction, continuation. So I'm gonna get better at seeing those myself, and maybe you'll see them more when we dive into smaller charts. But the market does a lot of that to show you kind of when you can get in or out of a trade, because it's going to shoot up, it's going to move up somewhere or down, it's going to move in a direction, it's going to sit back and chill, then it's going to try to level up or level down, retest where it was before, shoot to another level, retest where it was before, okay, shoot to another level, retest where it was before. So you see all this little level right here? Mm-hmm. This whole area would be what we call a support and resistance zone. Mm-hmm. You understand that? Mm-hmm. So Coolio, that one's like one of the coolest ones to spot, because that's always going to be, almost always going to be where the market, I can't even say almost always, I've always seen it reverse at a support and resistance level. It's just, those are the spots. And we will learn on another time about institutional levels, where the banks, the market makers already have these these levels on the market where it's going to turn around at that level, because that's where they choose to turn around. So let's just be mindful that they're always buying and selling, and that they always want to keep that overall in a balance. So excuse me. So let's go back though to the overall chart. You saw an uptrend, which is cool. So we're gonna start from just here, 20. We can do from here. This is the lowest low on their entire existence on the chart. 2016. Oh no, it goes further back. Yeah, it goes up to like 1994 or so on the thing. So it must be loading, but we're only gonna go right here, 2017. And because we see that uptrend, we're gonna put a trend line, because we see an uptrend. So where are the markers? Right here. So it's trend line. Click. You're going to give us some other options. Trend line, angle, horizontal line, array, extended, parallel channel, like regression trend. I don't even know. But we know this one. And you may also have noticed right here, a box came up, an additional box came up. And this is to say, hey, you want to change the type of the line, like you want a period at the end of it, you want to change the color, all of that style setting stuff. So then we click, we're going to click from the bottom here. and then it holds the spot, and we're going to bring it up all the way to the next point that we see, and then past it. So that's a trend line. So all right. And we might as well put one on top as well, right? Because if this is going up, this is going to hit other levels up here. Coolio. And we'll extend that out. All right. So we see that going on. What was the other one? Check my notes. The support and resistance levels that we're seeing. So off the bat, you want to point out one that you see, a support and resistance line? I'll put it in. And support and resistance lines are level in which the market constantly meets there. It constantly goes back to that area. So if you start here, you know you already see boom, it hit there, boom, it hit there, 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 go, nothing, that went and broke past it, but nothing.
This is support and resistance.
Yeah.
Okay, so how about right here?
Right. Right here. Let's do the rectangle because it's usually not just a line, it's like an area usually. You get that?
Well, it's different ones, like, and however it goes on that, what you put, that's what counts, right?
Mm-hmm.
Like, if you put a straight line, is whatever hits the straight line. If you put the ziggy line like that or something, then it's like whatever goes past that or doesn't go past that. Am I right?
Mm-hmm.
You want me to show you?
Look at the rectangle.
I mean, it doesn't really matter which one you put, right? Put a different color. Put the same line, just put a different color or something.
Yeah, definitely do that. These are, the other one was trend lines, and these are support resistance.
Right.
I was definitely thinking of that.
The trend lines, what is those? Purple?
Those are purple now.
Yeah.
Mm-hmm. Into orange. Too blue, that's too blue.
Orange for support and resistance?
This is what you're saying?
Yeah, yeah. Mm-hmm. Wait, up like another half an inch right there.
Hold on, what you said? I said, what's that? Support or resistance?
The support.
Yeah, it becomes, and they usually play off and become the same thing. Support becomes resistance, resistance becomes support, back and forth, up and down the market. Okay, that's a great one right there. And then I'm going to put this one up here too that we spoke of, where they already have kind of like the green layer. And then Hasudabi. Do you want to show us another one? Go from this whole area to there.
Oh, but the support here, resistance here.
Okay, this is a great one right here. for sure.
No, yeah.
You got there? And what I'm saying with the rectangles, which I want to really get one to see, because it's not just this line, it's all this whole thing, this whole area, like, would be it. Because sometimes it's not on the exact point, but it's in that area. The shaded.
I was saying I was gonna put my support
Yeah.
here on from this peak across, and my resistance from this peak
This peak right here.
and my resistance up here. Nah, a little lower, a little lower, 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 lower. Right, lower, right there.
So, because this goes horizontal, so right there.
Yeah, a little higher on that side.
Well, it's horizontal.
Yeah,
It should
so
be.
that's not them. That's a little.
Got you.
Yeah, right there. And then my resistance would be a little higher up here, like on this line.
Right there.
Yeah, keep touching right there.
Like there. Okay. So, yeah, these are all great support and resistance levels. And when we dive in and zoom in, you'll see even more. But right here, do you see why these would be all support resistance?
Mm-hmm.
Okay, coolio.
Retest. All that.
Yes. Rectangle, I would really like to know where you at though. So I'm gonna need you to show yourself. Okay. All right, y'all. So now we're gonna go down to the 4-hour chart. Oh, excuse me. Let's put another one right here. This is going to be another trend line. And it's going to be, because we saw this going this way, but we're going to see it going the opposite way. We're going to see, because we see just up from today, if it was just itself, this is going like that. Like all of these. This could have gone here, this could have gone here. Today it could go there. You've heard of the term higher highs and lower lows? Or lower highs and higher lows? Excuse me. Let's do this even in different colors. Yellow. All right. Now you see how the market is kind of coming to this little corner, this little intersection? This also usually indicates that the market is going to do a major shift. It could. It can, like, if this wasn't here, and we drew this trend line from this to here, and we did one like this,
Time frame are we on right now?
this is a day.
Oh no, it's still
Yeah.
rising.
But if we drew it here, like I can change it and see if you want to see. But it would always look like it's going up or down. We won't know really until we dive into it. Come on, you're playing games. But yeah, if I did this to this, right? Say this whole thing wasn't here, right? Now I went here. And then I put another trend line.
Yeah, it makes my resistance risky.
From here to here. Yeah, that triangle isn't as big as that triangle, but still, you see it got almost to the corner to the tip, and then it chose a direction. It went up. So again, we're just putting the trend line to the next level.
Can you put in a trade with only a take profit and not a stop loss?
You can do that. Some people do it, some people don't. In the beginning, you know, it's highly recommended that you do put a stop loss in because you are doing proper risk management when you do that. Meaning that you're making sure you're not risking more than you're willing to lose in that day. All right. So now we're going to take it down to 4 hours. Baby, are you down, 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 down? Down, down. Sky is falling. All right, again, this is not the upgraded plan. So, you know, when you don't get their upgraded plans, they have the right to advertise every time they feel. Now, and gratitude still for you allowing us to, you know, engage into your service, and gratitude to us, because if it wasn't of us, no one would enjoy their product. Okay. Now, here we're on a lower time frame, the 4-hour chart, and we see that what was on the day chart, these two lines, right? Two up top. Look where they were at on the day chart. Look what they're grouping and showing you right here. Look at the spots. The market just played back and forth in between that channel, right? Mm-hmm. And look at what it shows you on the day. Come on. Do the damn thing. Do the damn thing. Do the damn thing. Do the damn thing. Okay. Right. So you see right there, we were choosing it as our overall level of support and resistance. See that?
Mm-hmm.
This is what we did. We didn't say specifically it would, you know, but we said this is where it hits a lot, this is where it hits a lot, this is where it hits a lot. And then when we go on into the lower levels, all of these points here would have shared with you. We could have dived in to ride the wave. If we zoom up, right, and if you were in this market, you would have saw that, okay, it hit here as a, what is it when it hits here?
What's that? The resistance?
Impulse.
No, what level is this when something is
support.
bouncing off of it? Support, it's the floor right now.
Mm-hmm.
And then it bounced up and hit where?
Resistance.
Which is what? The ceiling.
Mm-hmm.
And then it bounced down. Did it go all the way down? No. But that's why this, when I say with the rectangles, it's cool because you can see the space, like it's going to go anywhere in that area. And then it hit back up to go where?
Home.
To the resistance, right? Okay? But it didn't hit all the way like that candlestick. It went a little lower, right? But then it went down and hit I hit a lower, right? Now from here, you got your second. This is hitting again. You could have gotten right here and said, well, you're gonna make a jump back up to try it out. You're gonna test it. You're gonna test it again, and then if you didn't get it there, you would have saw what was going on. You would say, okay, go down to test to hit and try here again. And usually this is how it plays for a couple days. This is the 4-hour chart. So it did.
So boom. All right. So if you get in right before the support, right, and you put a trade in for buy,
Yeah.
right? It goes up, hits the resistance, goes past it a little bit, but then it comes back down. Now, at that point, are you losing money?
You are in the negative. You are in the red, but you haven't lost money.
I'm in the red because it's not growing.
You're in
At
the
that
red.
moment.
It's moving.
At that moment, it's going in the opposite direction that you had put in for. But again, like just like say you put it right here and you thought it was gonna hit, it hit, right? This was the last level. Oh my God, support you put in for a
No, I
sell.
put it right there before the resistance.
Yeah.
Before the support.
Yeah.
Mm-hmm.
Well, the resistance up here, right?
Right.
And then you went for, but then it went up a little bit more, right?
Right.
So
the buy.
on the buy, but you put in a sell.
No, put it in the buy.
So you put it in a buy right here, wouldn't
Alright.
it be your move? You'd put in a sell right here.
Right here.
Okay, so my crosshairs are up here. My bad. So right here,
Right before the what's that? The support.
the support down
Put
here.
in the buy.
Yes,
Now it rose.
Yes.
It rose a little bit past the resistance.
All the way up
at
here,
that
yeah.
Point, I got profit, a little bit of profit, right? But then it goes back down.
Well, that's why we are doing 10 pips and dips, honey. Because this from here to here is 150 pips. So you,
From right away.
from that level to that one impulse. But remember, this is 4 hours. So this is, maybe even a whole day. Right? But it's 150 pips. So you wouldn't be needing to do all of that. You just need to see the rhythm of when it's moving to catch the ride. We'll be back.